So hello guys, I just want to give an introduction to something new. So today I'm going to talk about what to look for when buying altcoins. So this is a newsletter I wrote as part of my newsletter to Grace Group Academy. So I run an academy. You can see on my shirt. Grace Group is a brand. I have a group of companies. So I run many organizations under Grace Group. So this is Grace Group Academy, where I teach people about investment in crypto. So I wrote this particular newsletter uh, in September, right? You can see September 2021. So this is so most of you who don't know me, my name is Smart Things Atando. You can call me Rich Dilla. So I personally wrote this newsletter in September about does the token you buy really matter, what to look for in altcoins, right? So this is a lengthy, about an 8-page book, more or less like an ebook. But I want to just go straight to the point, right, and talk about altcoins, right? So basically, let me just go straight to the point, right? Because if I want to stay here and talk about what are altcoins, it's going to take a lot of time, right? So there are type of altcoins, we have stable coins. I mean, I'll do another lesson for this, right? But basically, I want to talk about what to look for when buying altcoins, right? So we have mining based, we have staking based, we have governance tokens, all these things. I'll take them on another lesson maybe someday. So here I want to talk about what to look for when buying altcoins. So what does an individual, when you are new in the crypto space, or maybe you are coming into this industry, you've been here for long, right? There are other metrics that I used when people are going to buy a stock, or maybe they want to buy the shares of a company. So everyday investors, they look forward to other metrics, or maybe other fundamentals they look at. So if you look at someone like Warren Buffett, when I started investing in hedge funds, I think somewhere around 2017, 2018, I was reading books about Warren Buffett, and he had his own strategies that he used when he was buying altcoin. When he was buying stocks or shares of a certain company, right? And I came to the realization that the metrics he used, like the moat, or let me say the business competitive advantage of the business he was buying compared to other businesses in that same industry. But now these metrics do not work in the crypto space, right? As I wrote here, right? Mm. So so you can see here, while many equate cryptocurrency to stocks or bonds, they are different, right? They are different kinds of things altogether. Most seasoned investors, as I mentioned, Warren Buffett, know how to evaluate a stock based on what the standard metrics like the price to earnings ratio, right, debt to equity or beta. But these types of metrics don't exist in the crypto space, as I mentioned earlier, right? So now, what do we look for if you're new and then you want to buy cryptocurrency, you want to buy a token? I'll do another class on what difference between tokens and coins, right? But now I'll be using them interchangeably, right? So they almost mean the same thing, but they don't. When it comes to the differences, that's also another thing. So I'll use them interchangeably in this lesson, right? So what are you looking for, or maybe what to look for when you're buying into cryptocurrencies? The first thing is you have to look at the business preposition of the currency, the blockchain, the token or the coin that is coming out, right? What need does it feel, right? What need does it come to feel, right? Satoshi Nakamoto realized that after the 2008 market crash, we needed something that is decentralized, right? That's why he created Bitcoin. So Bitcoin served as is a pseudonymous decentralized currency that does not need a central government to control. And that's the basicity, or maybe that's the foundation for all cryptocurrencies. Sorry, let me turn off this phone so that I won't get notifications, right? So that's why he brought Bitcoin. So now, if someone's coming up with a digital currency, that means what? Maybe it's an advancement, right? So most of the digital currencies that came, or maybe the alternative coins. So alternative coins are something called altcoins. So alternative coins are coins other than Bitcoin, or maybe are cryptocurrencies other than Bitcoin or traditional fiat. Yeah. So when you're coming up, the first thing is the business preposition or proportion. Preposition. What need does it feel? right? Is it disrupting an industry or is solving a problem? You have to look at this. You don't just create a coin because you have to create a coin. That coin must meet a need, must feel a need, or must solve a problem in a certain industry. Casino, maybe in betting, or any industry that is looking forward to maybe solve a need in that industry. Right. The second thing is what? The idea. Is it a hit growth narrative? Right. Is it innovative? How crowded is the space? Right. The space that this coin is targeting to enter. Is it fashion, NFTs, whatever? How crowded is that space? How much of a head start, right, do they have to capture the market? You have to look at the development team, right? So do they solve real world problems and have a valid use case? These are some of the things you look for. Can they achieve a large network effect? This is the second reason thing to look for, the idea behind the creation of the coin. And the third thing here, I made a mistake and I wrote team, number two instead of number three. So number three is what? The team. Who is making this coin? Who is behind the invention of this coin? Right. Is the team anonymous? Okay. Do they have good partners or backers in the team? Do they have good backers and partners? If you look at something like Dogecoin, you can see Elon Musk backing it. Mark Cuban is backing Dogecoin. So the people who are backing this coin or token, the partner banks or partners financial providers, who are they, right? Is a team qualified and adequate enough in manpower, right? That includes skill, potential, right, to realize the vision and the potential of the project, right? So do they have the skill set? Do they have the knowledge? Do they have the technology required to meet the potential of the project? Between the team and the backers, do they have any good connections in the crypto space or the industry they are targeting, right? So let's say you are making a token for cannabis, or a token for music streaming, or for casinos, or for whatever, a stable coin. Do you have a connection in that industry? Good connection in the industry you're targeting, right? You have to look at that. Do they give regular updates about the progress of the project? So if you look at Cardano, Chad Hopkins keeps giving us updates. I hold Cardano, right? He keeps giving us updates about the Alonso. Just recently, we talked about the smart contracts, the Alonso project, right? He kept updating us. He gave us a date, right? So this is a good project because you are constantly informed about the progressiveness of the blockchain or the token that you are holding, right? Do they give updates about that? Look at Ethereum. They keep giving us about the London fork, just recently about the banning of the banning of Ethereum to diesel gas fees, right? It happened, I think, somewhere last month, and this helps us to constantly get updated about the things that are happening in the space, or the coin that we are holding, right, or the investment that we are making in this particular blockchain or this particular token or coin, right? How much is the size? Uh, how much size is the community they have, right? So you can have two people holding a coin, or maybe three people, or most of the time you can see that 90% of the token is held by only two people, and then only one person, right, is controlling the entire thing. You have to look at the community, right? Or what is their marketing strategy, or how they marketing that token, right? Right, you have to look at how their marketing strategy is. Is that they're just making chants on Instagram or just making noise on YouTube? Who is marketing? Are they making ads? Who are they? Who is behind the marketing? Right. But look at it. Are there available funds to meet those marketing strategies? Do they have the receipt funding? How much and how much is needed to meet those funding strategies? Right. And marketing strategies. The fourth thing you have to look at is the technology behind the coin or the token or the blockchain. And have to look at if they have been audited, right? Is if this project or blockchain have been audited by multiple firms, popular firms, so to say, to expose any vulnerabilities in the network. And if so, there are vulnerabilities, or if there were any vulnerabilities, were they able to resolve them? Or in the case where there's a vulnerability or there's an attack or whatever, will they be able to solve them, right? How much is the progress in terms of development? Is there regular and active development? Because cryptocurrencies should be progressive, right? Technology should be progressive. So if you come up with something, you should have key updates and keep progressive developments, right? So you have to look at all. You can't just get stuck with one thing. No updates, nothing, right? Number 5 thing is the price. So before you enter to buy a certain currency, a certain token, or or a certain cryptocurrency at a time, you have to look at the price at that time. Maybe it may be a good project, right? But you have to look at, is the token currently pumping, right? Is it in accumulation phase? Is it consolidating? Is there a pullback? When was the last all-time high, right? Has it fallen? And when do you think it's going to rise again? You have to look at all these metrics, right? So look at them. So if you compare the market capitalization, right, and you look at the current price, right, do they have enough room again for them to grow to meet the desired rate return of investment, the ROI? You have to look at all of these things. Is the market cap justified? If you look at, so let's say Tether, for instance, I don't want to discredit anybody's business, right? But if you look at Tether, there's the stablecoin Tether. There's a lot of confusion about the availability of enough funds to back up the amount of data being printed, right? So this is actually problematic, right? So it's justified. So what's the risk to reward ratio considering the current price of the token? So let's say that the token has just pumped, let's say Shiba Inu has just pumped 500%. Now, if you're going to buy it, right, the likelihood of it pumping again is very low, right? In the next, in the immediate time, the likelihood of it pumping another 500 is very low. You have to look at that. So if it has just pumped, you might have to consider waiting for a little while for it to maybe pull back, then you enter again. So you have to consider all these things while buying. So this conducts the timing. And the number 5 thing you have to look at is the liquidity of the token. This is very, very important, right? Because if you don't just put your money into an investment, nobody invests money to make someone else richer. They invest money to make themselves rich. I invest my money into real estate, into Bitcoin, into Ethereum because I want to get rich, right? I want to get profit, right? So you have to, this is the liquidity, the ability to sell and cash out, right? So where can it be bought? Can you buy it on Kickswap, on TaxSwap, on all these, maybe Uniswap, and all these decentralized platforms? Where can you buy? Where can you get a point to buy? Right? Is it on maybe a centralized exchange like Binance or Coinbase or any popular what do you call it, exchange out there? Where can you buy it? No, can you enter and exit anytime you wish? Right, this is very, very important. You don't just buy into a token because you must have an entry point and what an exit strategy. That's what important thing. Don't just buy into a token. Have an exit point and have an entry point and an exit point. You have to consider that. So now, if I know that I'm going to enter this coin, let's say I bought Solana at $4, right? When it was $4, I think somewhere in February. Right now it is around 200. It went to 200 and now it's around 160. So now my strategy for Cardano is I'll exit at $500. So now when Cardano is 500, I'll exit, I'll cash out. Now maybe I'll jump to another project, right? So now if I want to cash out in Cardano, can I exit at a time it's 500? Can I get my funds when I want to exit? That is very, very important. And now at the time of exit, can I cash out? This is very, very important when buying a token. And now the token itself, this is the chief point you have to consider. The token itself. So when buying the token itself, when you have to buy the token, when you want to buy a token, when you buy a coin or a new project, one thing you have to look at is what the token itself. Look at the distribution, the vesting periods, the circulating supply, and the inflation, both long-term and short-term. This is very, very important. You have to consider that. Or how is it distributed, the vesting period, the circulating supply, and inflation, both short-term and long-term. In the situation where the circulating supply is increasing rapidly in a short period, consider taking a pause and wait till the majority of the coin has been made available for investment. What happens is that, like most of these tokens, some of them they always hold it back, right? Maybe they print, let's say 1 billion of them. That's too much, though. But let's say they print 1 million of them, and they make available only 30,000. Right? But now that would not be a good time to invest. But you have to wait till maybe they make available, let's say 955,000, right? So maybe just only 45,000 are left, maybe in the hands of the holders, right? So that would be a good time when majority of the coin is made available in the market for investment. Maybe this will help to pump the price, because if you buy the time the only a limited supply of coin is available, and then they release most of it to dilute the price, and the price is more likely to go down, right? So this is a good thing to consider when buying into new currency, whatever. What is there any deflationary mechanism in place? So deflationary mechanisms helps to hold the price from depreciation, right? Maybe as I go further, I will I just mentioned about banning and staking and all those things. Are there any incentives to keep the coin off the market and reduce circulating supply, such as staking, right, farming, and locker pools? These are very, very important because staking will help to reduce the circulating supply of the coin. So as the circulating supply reduces, there is increase in demand and the price goes up. Right. When you also stake, maybe you are given a governance coin, or maybe you are even given more of the coin. Right. So let's say you stake Ethereum to get more Ethereum. Right. This will help to increase the price, and then there's more demand, and thereby increasing the price of the token that you're holding. Right. Does the coin have utility that would open sustainable long-term demands? Right. Is there a utility for this token? So you can see that Mark Cuban's companies are receiving Dogecoin, right? You can see Bitcoin became popular because Elon Musk and Tesla were receiving. Tesla was receiving Bitcoin, right? So the coin that you're buying into, does it have a utility that can have a sustainable long-term demand in the future, right? That the demand for the coin increase as the use case of the protocol increases, right? So let's say you build a blockchain, like look at NFTs. I've always said that Ethereum is going to be big because almost everything, banking systems, central bank, digital currencies are going to be built on the Ethereum blockchain, right? So Ethereum is going to be big, right? So as there's more demand on the building of NFTs and then buildings of other government central banks digital currencies, right, is going to help increase the price of Ethereum, Ether, the native token of Ethereum blockchain, right? So you have to look at all these things, right? So, and the last thing you have to look at when looking at the price of the coin or the coin itself as well, that the token model allow for holders to benefit from increased adoption, right? Because this is very, very important and key because you don't just buy a token because you want to buy because you have to make profit, right? So this helps so things like fees reductions. You see what the Ethereum blockchain just did, reduce the fees to the London fog, right? And then there's revenue sharing, and if sometimes they have to burn part of the tokens, maybe to decrease the circulation supply and increase the demand and then the price, right? So if there's all these things incentives are in place, right? It's a good project to invest your money into. Maybe there are other things you want to add, you can just comment below this video, and please share with your friends and subscribe to my YouTube channel, Direct Boy. I have so many things that I do, and you can see that in my about. I have an academy, I have a private Telegram group, you can join TMG, a lot of things that I do, right? I also trade conversing, just join me, let's learn all together. I'm here to learn and ask. So if you have any views, just share them below the video in the comment section. I'll read them and I'll be there to talk to you. So this is my first YouTube video actually. So just show me some love and subscribe. I love you. This is Martin Napoleon, aka Rich the Lad.